You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today's Thursday, 7th day of November, 2019. Thanks so much for joining us. Whoever you are, wherever you are, well, we're just glad to have you right here, right now. If you can't see the chart I'm about to put up, and you would like to see the chart I'm about to put up, go to our homepage at CFRN.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that'll give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, go to cfrn.net/live. And there you'll find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, the high-level battle continues. Let's look. Just take a look right here. Early on this week, we measured the distance from here to here, and then we measured that same distance from here to here, and there we are. Question is, what can we do with this? Can we take it any higher? If we run an extension, a Fibonacci price extension from just the last leg up, we get a mathematical number just slightly higher than where we are at 3,100, and that would be a 100% measured move. In other words, the distance from here to here becomes the distance from here to here. Now, this journey to the top began really right here, October the 18th. We got a confirmed bullish cross on the 18th. A bullish cross is when this blue line rises above the green line. There we go. That's simple. Trading's not easy, but it can be that simple. Again, October 18th, confirmed bullish cross. And since then, price has moved up from 29.80 to knocking on heaven's door here, 3,100. That's the big number. That's the one everybody's looking for, watching for. I think the question becomes now, what happens when we touch 3,100? Do we touch it? Well, it's hard to imagine us getting this close and not doing so. High today so far, 30.97. We'll watch it, keep an eye on it throughout the show. Let me give you the numbers from around the world. Then we'll get a recap from Michael. See what happened in the live training room today. To all of you that sent condolences my way, thank you so much. It's very much appreciated. Your thoughts and prayers are appreciated by myself and my family. All right, the Dow cash market currently up 253 points. NASDAQ up 66. S&P 500 up 18. And the Russell 2000 up 8.5. In the commodity basket, crude oil up $1.31, trading 57.66 last. That's a gain of over 2.25%. Gold, on the other hand, down $29. That's a loss of 2%, trading 14.6420 last. You'll recall earlier this week on this radio program, we took a big picture look at gold and put it on the screen. Consider 1475 to 1470, and then I think we had some more numbers below that. I'll show you those when I come back. But gold trading 1464.20 last. In Asian markets at the close, Nikkei up 26, Shanghai barely positive, Hang Seng up 158. In the European markets at the close, FTSE up 9.5, DAX up 109, and the CAC up 24. So 2 days back to back, I believe. That's a green day in Asia and a green day in the UK. And so far, it's a big green radio Thursday here in the US of A. Let's go to Michael, get that recap. I'll be back. We'll look at the Concierge Trade Alerts, the Logic 247 alerts, and we'll talk to John. Michael, take it away.
Okay, I got it. Here we go. Coming over to this side. Let me see, is Joan in here? Okay. Good. No, Joan's not in here. I sent her the wrong time zone for our meeting. Okay. Let me bring this page up.
Okay. All right, I'll hit mute. It's all yours.
Okay. All right. I got it going. All right. Good afternoon, everyone. Today is Thursday, the 7th day of November, 2019. If you have not taken a free trial with us, go to the homepage here at CFRN.net. Right here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page, which you can go directly to if you want to, eminitrainingschool.com. And over here in the right-hand column, all you need to do is put in your name, your email, your phone number, hit the register now. Once you hit register now, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial. Okay, now back to the spreadsheet. Today was a yellow day. It was a very slow day this morning. Trying to scroll over. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. As I said, today is the 7th day of November, 2019. Today we made one tick on the euro, one tick on crude, put us at plus 16.25. We took a total of 5 trades today. We did not get to the goal today. All right, we missed a couple of trades that would have gotten us to the goal, but nevertheless, we did not get there. On the month now, we're at $582. That's over 5 days, averaging 116 per day. On the year, we're at 31,368. That's over 202 days, averaging $155 per day. Okay. Now, in a minute here, I'll minimize that, and we'll go through what did or didn't happen today. Now, the gold had a huge move down today. Huge. But sadly, it did not give us trade setups on the way. Doing the ones that we do in the room, it did not give us any of those. It did, like the 164s, it did give a bunch of those. The 164s and the 137s. But doing the ones that we do in the room, it really didn't give us much at all today. We had one break-even trade right here, I think, right? Yeah, one break-even trade. And then you see I was drawing the trend lines, but keep in mind that as it was going down right here, it was going into the low of the day. That's why there was no trade right here, because it was going into the low of the day. Now the 164s, we had a short right here, 164 short there, a long right there, a short right there, a long right there, a short right there, another short over here, another long right there. If you know the other trade setups, as well as the ones that we do in the room, then there was plenty of opportunity today. But just doing the trade setups that we do in the room, you have to have a trend, and you have to follow the steps. Okay. So on gold, we had one break-even trade. Now on the yen, we had one trade for one tick at the end of the session right here. Okay. I was drawing the trend line here, but it was going into the low of the day, so there wasn't anything we could do. Every time I drew the trend line, the low of the day was right down below us, so there wasn't anything that we could do. On crude oil, let's see. Even on crude today, we had a break even there, a break even there. Now, if we'd have stuck in with this one, it'd have gotten us the goal for the day. We had a +1 tick right there. And that was it for the morning session. Then getting into the break. Now, keep in mind that we're going into the high of the day here. 57.14 is the number for the week. Now, it got a full buck away from it yesterday. So you could have been looking at some call options for it to get back up to it, at least. But it was, the wee hours. Let's see. During the break, one shorting opportunity right in here. That would have been a break even. And that was it for the crude. The ES, we didn't do anything with today. It started out right here at this weekly trading zone. Now, this right here is an all-time high. And the ES has been difficult to trade up here at the all-time highs. Right here at the end of the session this morning, it started to trend finally. And, gave a shorting opportunity. That would have been a break even right there. A long opportunity right here. That would have worked out. And a short opportunity right here. That would have worked out. But that was all during the break. Okay. So let me let me go back to this page. Here we go. If you have not taken a free trial with us, go to the home page at CFRN.net. In the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page where all we ask for is your name, your email, and your phone number. Hit the register now button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. And now we'll go back to this page right here. This is our spreadsheet. Now this spreadsheet, for those of you guys who don't know, I think everybody in here knows, but this spreadsheet goes back 6.5 years. It's a daily spreadsheet of the results from every day that I've been doing the room. Today is the 7th day of November, 2019. We made one tick in the yen, one tick in crude. Put us at plus 16.25. That's not right. Yeah, it is. It is. That's right. Okay, plus 16.25. Today we took 5 trades, and 3 of them were break even. On the month now, we're at 582.50. That's over 5 days, averaging 116 per day. On the year, we're at 31,368. That's over 202 days, averaging 155 per day. Okay. Now, I know that doesn't seem like a big number, but what we want you to do is work your way up to more contracts. Okay? You got to earn your way up to more contracts. And, you know, like if you added 1 contract per month at the end of last month, you would be up $189,678. That is if you did everything exactly the same as I did. And I miss half the trade, so you should be doing better than that. Okay? And you should be able to work your way up to 1 contract per month. Okay. And that's that. With that, we can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready.
Okay.
And there we go. Recap.
There we go. I see your charts. Today I didn't get the goal. We ended positive, but I did not get the goal today.
Well, that's the truth about trading.
It is. It is.
When you've only got 2 hours to work with.
Yeah, I mean there was opportunity during the break where the goal could have been gotten, but yeah, that extra half hour.
All right, guys, we're going to look at the Concierge Trade Alerts from last night. If you want to grab a screenshot, there they are. Okay. Let's go to the S&P first. These are all this week's weekly trading zones. And if we step back to the 3rd, Sunday night, Globex open right there. Green candle right there. We open, we have an alert, we trade right up into this weekly trading zone, consolidate, make a run at the zone overhead, 86.87. Can't quite get there on the first pass. So we pull back to the BBC and the weekly trading zone. Confirm good support. The leg, retracement, and then the leg takes us right up to the zone. Looks like we missed it by one tick. The swing high, 30.85.75. So then price pulls back to the BBC, which we expect to be good support. And it gives us a leg and a retracement, and a leg and a retracement. And right here, this was the tip-off. Right here, which led to right here, bearish cross, which took us back down to the zone, good support, sent us up to good resistance. Now this time we spiked below and we stayed below. We were back and forth. The weekly zone became like a center of gravity with price oscillating below and above, below and above, and that's never good trading. When that's going on, whether it's a high level battle at the top or not, this is not conducive to trading. So we had a period really from about 7 p.m. Eastern on the 5th until this morning about 2 a.m. Eastern, ahead of the London Open, where this led to this. So this takes us up to the zone overhead. Remember, we missed it earlier in the week by a tick. So we get to it, we consolidate. We could even, this is a slice, it sliced through it. So then what happens? We come back, confirm good support because it failed to be good resistance. Good support. Pull back, test it again, test the BBC. Both of those we expect to be good support on a pullback. They hold more often than they don't. And then that gave us another leg and a retracement and a leg and a retracement. And this is, in fact, a high level battle at the top. So last night, Concierge Trade Alert for the S&P, consider being along 3084. Right there. Trade to target overhead, weekly zone 3086. We've traded through that now up to 3096. So it was initial 2-point target, and then it ran up to about 12 points at $50 per point, $600 per contract traded. However, getting out at the top is a bit tricky, but the only way you can do it is by luck, because no one knows it's a swing high or swing low until well after the fact. Now on the short side for the S&P, consider being short 3070. Now these got out last night at 2040. So here's the 2030 candle right there. So 3070. And right across here. So from 3070 we got down to 3068, and then important prices, important areas, almost always tested. Just as up here at the top, I didn't mention this, we're at 3084 on that CTA trigger, and this pullback came down to 3084 and a quarter. It didn't quite, it needs to go one tick below the trigger to qualify as a, to technically qualify as a second trigger. It didn't quite do it. But over here, this drop was to 68, that's 2 points, then another 2 points, and then this one dropped to 60, we'll call it 64, so that's 4 points. And then we get back above the trigger. This time it's holding, and up we go. So there you have the S&P. Two-sided action. Now for the Dow, the trade alert said, consider being long 27,500. And that's right there. Much cleaner move. It just went up. So 27,500 to 27,770. So that's 270 points. $270 move. Alexa, 270 times 5.
270 times 5 is 1,350.
So we had a $1,300 per contract move. Are we done yet? Well, beauty's in the eye of the beholder. Let's see how clear we can make it. Now, this isn't quite an extended move, but there would have been an exit signal here, right? And then whatever qualifier you might be using to get long again would have led to here. But for this part of the move, no, there is no exit signal as of yet. Okay. All right. And the short side on this was 27,400. So price walked right up to the line. The prairie dog didn't like what he saw, I suppose. What's the low there? 390. We got like 10 ticks below the trigger. Just walk the line. So from zone to zone, if we go back to Sunday night, have a look at the Dow. So here's the third. Here's the first trigger of the week for the Dow. Took us up to the zone, consolidation. Consolidation is the most likely thing. Only 3 things happen at a weekly trading zone. Consolidation being the most likely. So we did consolidate there. Continuing on up. Almost another 100 points. 80 something. And just like the S&P, pulled back into the zone. Another leg, a retracement to the BBC. Expect it to hold. It holds more often than it doesn't. And then we got into this from the bottom to the top. I don't think we ever got back to the bottom. Yep, yeah, we did right there. Now the range from 365 to 490 is at 125 points. Is that tradable? It is. But I think we've been spoiled of late with the volatility that we've had for the past year or better than a year. And then here's the move this morning, 2 a.m., just like the S&P, where this thing took off, triggered the Concierge Trade Alert. And if you stayed in here, and if you're still in it here, or if you re-entered perhaps here, as we took out that high, and got back on the other side of the CFMA 1. So that's the Dow. Russell looking weak. Is the Russell about to lead us to the downside? I don't know. That is a current zone overhead, 1611/12. Got one more overhead at 44/45. The one below is 97.98. Zones go out to the partners, passport holders, Monday morning, 6:15 a.m. Eastern. And below that is 80.81. Here's Sunday night, trigger, right into the zone. And then we go from, after consolidating here, go from zone up to the zone, back down to the zone. And right here, so let's talk about this for a minute. Okay. When price does this, it's trying to get to the zone below. Price is always on the move from the moments the market opens Sunday night, 6 p.m. Eastern, till Friday afternoon at 5 p.m. Eastern. Price is on the move. It's trying to go somewhere. The zones provide us with a framework which gives us an idea of exactly, because price is always going to return to the important prices, important places. It just does it. Over and over. You can't stop it. It's baked into the cake. Now, when you can clearly see that price is trying to get to the zone below, well, how do you know when that's no longer the case? We'll take a look. Just consider there was an alert here, and I don't doubt that there might have been. When was that? That would have been the night of the 5th. The 5th. Russell. Short at or below 1596. Yep, okay. Let me show you this. You don't think I'm making it up. Night of the 5th. Short 1596. Okay. So you would get short 1596 right here. $15.96. Get a nice move down to 86.90. It's about a 10-point move. Russell, $50 a point. That's $500 per contract traded. So we get a leg, we get a retracement. We pull up to the BBC. We expect that to be good resistance until it isn't. So if that's good resistance, it's going to send it back down towards the zone below, which we expect to be good support. However, because of this pullback, there's now an obstacle in the path of price. Blue and climbing. You always have to expect blue and climbing to be good support, the same way you expect red and falling to be good resistance. So sure enough, we get resistance here, back to support here, back to resistance there, and then we spike the support a little bit, and it really starts to look like we're gonna come down, take out this swing low, and make it to the zone below. But on this candle right here, this is where the narrative changes. So from this 10-point move here, whatever you took out of that, that's great. We never did come back to trigger a second time here. Well, actually, we triggered on the first 30-minute candle, then we triggered again on the second 30-minute candle, and then we triggered again on the third 30-minute candle. I guess there's 3. But right here, when price gets on the other side of the BBC, the narrative changes. Now we have to say price is no longer trying to get to the zone below. Right there, it tells us price trying to get to the zone overhead. And it did. We spiked it. That is a slice. We pulled back, but we didn't pull all the way back to the zone. We missed it by a couple ticks. And we get a leg right up to the zone overhead, miss it by a couple ticks, pull back to the BBC, which we expect to be good support. Now, right here, just as the narrative changed from zone below to zone above, this narrative has been zone above, but if this red candle closes below the BBC, then the narrative becomes zone below. It's really that simple. So last night on the Russell, now we talked about what was the previous night. So let's go back to last night. Russell, long 1604. 1604. There you go, 1604. We put on a swing high. Yeah, we'll call it 1610. So that's 6 points, $50 a point, $300 per contract traded. That is what the market made available. And on the short side, 1589, and that was never triggered. So no two-sided action for the Russell. Let's go to the NQ. All right, NQ only has one more zone overhead at 83.40. $83.40/41, and the zone below that's 82.26. There we go. Now, last night, Concierge Trade Alert, considering a long 82.45. Remember, these are 30-minute candles. So 82.45. All right, from 45 up to 63, about 18 points. So it's $360 per contract traded. Important prices, important areas are almost always tested. So we get back below the trigger, run up again, back below the trigger. Support at the BBC, another leg, higher high. Now, making that retracement again, price always reverts to the mean, and in our case, that green line is the mean. Okay, all right, let's do crude. Now, we had a similar. Well, let me back up for a moment to the NQ. Scoot back to Sunday night. Yeah. So 82, 81.95. Okay, so we also have a weekly zone at 81.95/96. There we go. So first trigger of the week, up to the trade 2 target, which it did once, twice. Consolidated, continued through to the zone overhead, pulled back to the BBC, good support, back up to the zone, resistance, back to support. This time we get a splice through the zone, pull back, good support. Whenever we slice through, we expect a retracement. This time we pulled right back to it, good support, continue up. No trigger on that day, either side. Now we start pinging back and forth from zone to zone, back up to the zone, down to the zone. We spiked that one pretty good. Let's see. 81.38.39 is the zone down here. So we didn't get it. We started the journey. Buyers came in, bid it up, sent us back over this zone. And then from zone to zone. There we go. All right, now crude. All right, last night on crude, considering a long 57.20. So 57.20. So we get the initial move takes us to 57. So that's $370 per contract traded. Important prices, important areas, almost always tested. Back below, Off we go again. Kind of a little bit of a double top here. Slightly higher high by just a few ticks. The swing high here, 88. So that's $680 per contract traded. That's what the market made available on this second trigger. Question is are we going to complete this journey? Let's look. And the market will tell us exactly what it's trying to do. It may actually come all the way back to the trigger. If we go sideways a bit, the BBC is going to rise, and this price comes, and when those two meet up, just like they did here, we would again expect that to be good support. That might give us the third and final leg. 1, 2. It takes us right up to the zone. Okay. And on the short side last night for crude, 56 1/4. That was yesterday at 12:30. The zones came out last night at 8:40. So we never triggered, I guess, did we? 56 1/4? No. It's like we never touched 56 1/4, so there was no short trigger for crude. All right, we got one more market to look at, and that would be gold. Gold has fallen through the lowest weekly trading zone. Most of the week we were pinging back and forth between zones. Let's get back to November 3rd, Sunday night. Zone, down to the zone. Couldn't make it here. Was there an obstacle? No, there was a trigger there. Right here. Then we come back. And yeah, we never really pull away from the BBC. I mean, we have a small pull away, but it just kind of wound pretty tightly. So here we make the drop zone to zone. Off this trigger to be short at 1508 takes us down to 1494. To the lowest weekly trading zone, which we hit on Tuesday. Put a little double bottom there. Go from zone up to the zone. And then we come back to the zone. Now from 83 to 93, that's $1,000 per contract move from zone up to the zone, back to the zone. When the market found good support here and it attempted to rally to go back to the zone overhead, obstacle in its path, BBC, we expect it to be good resistance till it isn't, and it was, and it sent us through that zone, our lowest weekly zone, and it puts us right here right now at 1464.30. Let me see if we had a lower zone last week. 65.66. That was last week's lowest weekly trading zone for gold. The Concierge Trade Alert last night for gold was to consider being short 1489, and that would be right there. Important prices, important areas, almost always tested. The swing high here was 89.20. The trigger's 89. So we triggered, triggered again, made it to the zone below, put in that little doji. Good support, that's what we expect. Sends it up to the BBC, which we expect to be good resistance when we approach it from below. That sends us back down to the zone where we anticipate good support until it isn't. And this is what until it isn't looks like. And now There we go. So from 1489, from 89 to 69, it's a $2,000 per contract move. Now the swing low is actually 62. Alexa, 89 minus 62.
89 minus 62 is 27.
So it's a $2,700 per contract move.
I'm not sure.
Okay, thank you. So from here to the zone to here, $2,700 per contract move, and we do not yet have an exit signal. We'll watch for that. Okay. All right. That covers the markets. See if there's any questions in the chat box. Oh, Mike, I already gave you that. Seen John yet?
Nope.
All right, guys. I'll be back in a minute. I'll give John a call, see if he's coming on.
Okay. Uh, 1482, the lowest gold zone. Let me go look. I'm not sure, Mike. Let me go look. This was 3 days ago. The mini Russell Crude Gold. 1482, 1483. Yep, that's the lowest one. Okay. And I answered the question. Yeah, it's unusual to be that far below the lowest zone.
That's indication of a particularly bearish market.
Yes. Indeed it is. Yeah, I'm just looking at your charts. I mean, I know what happened in my charts today. And the sad thing was, most of the time it was going into the low of the day. Most of that move. So we didn't get a bunch of trade setups on the way. You know, if you were doing the 164s where you don't care about any of that, there were a bunch of those. But the regular trade setups. Yep, John's in. Okay. I just opened up his mic.
Hi there.
Hey, John, welcome to the show.
Yeah, thank you. Thanks very much. Good morning to you. Listen, you know, it's pretty interesting because right now it's a little bit tricky, some of the trading. You know, example, last night, initially there was a kind of a break, and you know, it kind of, I think the market broke when they announced that there were going to be hearings next week. And then as the night went on, there was no follow through to the downside. And, you know, I could see there was strengthening up around midnight going through 1, 2. And then all of a sudden it just like rocked higher, basically on the possibility of lowering or, you know, reducing the tariffs on both sides. That's a pretty big deal. And further to what we were saying with Garrett yesterday, you know, his chart, that chart he put up was very telling. And as we said, you know, if it breaks above the you know, it was sort of like trying to do a reversal yesterday. And then it kind of, but I said, you know, if this thing breaks out to the upside, it's probably going to be substantial. And then the news, you know, the news came out. There was a bit of a pop after the close because of Qualcomm, which is a chip maker, and there are several other stocks. DXCM is a kind of a diabetes drug. It's up huge today. That's been a pretty interesting candidate for a while. So I think it's, I'm not sure if it's hit an all-time high today or not. Yeah, it's hitting an all-time high.
Which one?
DXCM. Phenomenal situation there. Qualcomm is also, like Qualcomm is
That's quite a gap.
Yeah, sure is. And this is, they've got, I think they have a blood sugar monitoring situation that people can, instead of pricking your finger, you can wear this thing and it gives you a readout all the time on your blood sugar.
Do they wear it or do they implant something under the skin?
No, I'm not sure. It's actually not a very invasive thing, is from what I gather.
Right.
But it certainly is. I mean, look, it's crazy. Look at the way this thing just reversed upwards. So that's
and
a
some
big
pretty
deal.
big volume too.
Put up Qualcomm, QCOM.
Too many O's.
Yeah, another one gap this morning, and that set the semiconductors on fire. So if you could look at SOXL.
I'm sorry, John.
Sorry, SOXL.
SOXL. Got it.
So we're actually at a new all-time high, even though we're off the highs right now. I'd still be very cautious here because I think sometime between now and next Wednesday, the market's probably going to sell off. It's probably going to get a bit of a scare. And, there's a lot of things going on. I think there's just going to be probably sometime in the next month or two, there's going to be just a lot of rocking and rolling. And look, remember back in January 2018, I think it was, when they had all this drama with McCabe being fired, and that actually pushed the market down. Tensing and in fact, maybe tomorrow we can look at it. The clip that was on Fox Business last night with Lou Dobbs, the degenerate.
Yeah, I know you're talking about.
Yeah,
Joe DeGenova.
Yeah, Joe DeGenova and his wife. I mean, what they were saying. I mean, it's listen. This thing, we said it from day one. When all of this comes out, it's going to rock the world. And Papadopoulos has said something similar recently. I think, listen, it came out last night. There's a tweet, it was, I think the Washington Examiner or one of these papers came out and said that, I think they said Obama, maybe, I don't want to be sure about that, but this Brennan set up a task force to take down Trump. I mean, this is just absolutely outrageous. If that is all proven up, and who knows where we're going, it could really become a very big deal. And then this, impeachment thing and all this stuff that's going on there, it's just, it's going to, I think there's going to be a lot of drama in the next few months. So
there's going to be drama right up to Election Day and beyond.
Yeah. So,
which should keep the market moving, and so I mean, from that angle, it's a good thing.
Yeah, exactly. There's no guarantees. Now, look, we said yesterday that maybe they'll knock the gold down to 1460. A friend of mine just called me, who's very connected in the gold world. He told me they just did the biggest smash in history. I think they did 27,000 contracts in 5 minutes to break the gold down. So, these fellas were caught short. They rode it up to 15.5. They basically got it, walked it back about $100. I'd say there's a pretty good chance that they're going to cover sometime in the next, before next Wednesday, I wouldn't be surprised if the gold reverses up sharply next week on possible fears of what may come.
Well, if it should break, it looks like there's plenty of good support from 1400 to 1440.
Yeah. So, and it could be construed as a kind of a three-wave pullback. You had that first break from 1560, then this sort of B wave, a sideways B wave, a C wave looks like is emanating right now. So, if this C wave stops and reverses, that could be very favorable. So, and the upside could be hard to catch. I think the difference is this time the upside will potentially, maybe keep going this time when it unfolds, especially going into the end of the year and that. So the palladium is two things are happening today. I mean, we kind of call this copper. Remember, it wasn't so long ago. It was down 250 or so, and it's hitting new highs today, 272. And we said it might be heading. Well, we actually said, the initial target was 270. Now I think we're looking for potentially $3 and possibly 340. The Brits, I think, either lowered rates or they're going to lower rates over there. So the global stimulus just continues.
This was the trade I put out on the show the other day for everybody: 271 to 275.
Yeah, not good for you.
That's $1,000 per contract move.
Yeah, it really looks like it's going to go right up to that previous spike there, 283.04. Can you put up FCX?
FCX, sure.
Yeah, that's Freeport McMoran, biggest copper producer, and when they start moving, it's a pretty. They were just talking about it on CNBC a minute ago, and John Nigerian was saying, hang on to this one. It's probably going to be a big deal. So what I would look for, we're getting down into sort of buying territory on a lot of these golds again. Royal Gold actually changed today. It's leading. It's actually up. You might want to take a look at that. RGLD. So you got a big outside day.
Yeah, you really
I
do.
think, yeah, and it's up on a down day. I think that's pretty impressive. So it looks like Royal Gold has found, its support level around the 110. Could it get back to 100? Yeah, you can't rule it out because it hasn't tested 100, but it may not get there. So, if we do have an upturn, I think it's less likely now. And also you got a kind of a really nice three-wave pullback or multi-wave pullback on the Royal Gold there that potentially, could, I think if you start seeing this thing pulling away to the upside, I think that's it is a leading indicator. It led the gold higher ahead of everything, and I'd be paying a lot of attention to this stock. So, and I think really anybody who missed the last rally in the metals probably got a pretty good opportunity now to be in for the next leg up. The grains, which we were talking about yesterday, and looking for upside reversal, are up today, probably on this tariffs easing. So especially if there's going to be gestures by the Chinese to kind of do a bit of buying. Mm-hmm. In fact, we looked at it yesterday and we actually said it looks quite constructive. I'd be inclined to buy that. We've got a kind of an outside day there. This is actually quite a bullish development, and I think I said to put a buy stop above that just in case.
I like 940 to 950, 955.
Right. Yeah. So this thing actually could turn into something pretty big. So I would, especially, I think tomorrow this report's coming out. So that's actually a big deal too. If that report is bullish tomorrow, this thing is probably gonna blast higher. So that's we said yesterday the energy might pop on the cold weather, which it has. Actually quite remarkable rebound off a pretty big break yesterday. And I'd say right now it's probably, I think the energy's got further to go, given the total rebound that it managed to make since yesterday.
Yeah, the turnaround came last night about 2 a.m. Eastern.
Yeah,
and
probably
upside target overhead 58.15.
Yeah. So the situation is look, one of the things we haven't hit a new all-time high for quite a few months, or for probably 3 or 4 months in the market. When you get back to all-time highs like we just did, and when you start hitting all-time highs on all cylinders, not necessarily all cylinders, but 3 cylinders, at least the 3 main ones, the NASDAQ, the Dow, and the S&P. It's hard to buy all-time highs, but it tends to be the right thing to do, because they just, in a really strong bull market, the surprises are on the upside, and we got a surprise last night. Now, regardless of that, the markets are fraught with risk, because it is, we're 10 years long in the tooth on this thing. All indications are that we will continue to go higher, with some dips and things, continue to probe higher, but at any time you could also get a reversal just come out of nowhere, some of the, kind of like that sell-off yesterday afternoon. So you just have to play the market that way for the time being.
I'd say the pound's still under pressure here.
Yeah, well, I think because of the election circumstances and that sort of thing, it's kind
There's
of
also some
pulling
kind of
back
interest rate decision today that the markets didn't
they're
react
gonna drop. That's why it pulled back a bit. But I'd probably put a buy stop at around 129, something like that, because something might break and cause the pound to go higher here, just out of the blue. And I think I'd want to be on that trade, because it really looks like it could go up to 140. And I guess as the election, we're only a month away now from the UK election, and although it looks like a foregone conclusion, there may be things that, remember, if the euro deal is improved or delayed, that's kind of bullish for the pound, and also the certainty of getting out of Europe could also be bullish for the pound. So,
and remember that the coronation of Hillary was a foregone conclusion until election night.
Yeah, exactly. So good to talk.
Hey, how's it going, guys?
Good.
Listen, I better bow out, but great to talk to you, because
All right,
I
John.
can't come.
Thanks very much.
I haven't much time today, but thanks very much
Talk
for
to
the
you
invite.
soon. Okay.
All the best, Tom. Bye-bye.
All right, Dr. Tom, let me send you over the screen.
Okie doke.
There you go.
Sounds like a plan to me.
So, how have you been?
I've been doing good. How about yourself?
Doing good.
We
Doing good.
had our not last night, but the night before was the first class of our second term of the Bible College, and we added 4 new students. So now we're up to, I think, 21 or something like that, after only a month of being open. So we're really happy about that.
That's awesome. That's fantastic.
Yeah.
Congratulations.
Thank you.
Well done.
Yeah, the big college, the International, invited me to be on the Board of Regents, because I got a big mouth and I had a lot of ideas on curriculum, right?
Mm-hmm. Right.
So they said, well, why don't you be on the Board of Regents? So I went over there Monday for a big meeting, and we were discussing curriculum and so on, because the school's 21 years old and the curriculum sort of needs a facelift. So in the process, everybody voted me in as the academic dean for the entire international college.
Well, good for you.
So
That's great.
I'll get to have a lot of fun, working on the curriculum, which is something that I love. And that'll be a great time.
I'm going to hit mute on my end, turn the microphone over to you, and
Okay.
I'll be back in just a couple minutes, but you keep going.
All right.
All right.
Well, folks, today we're going to start a new series called A Biblically Correct History of Money. History is history, but real history always reflects the Bible. So it's just in this, I'll be showing you some Bible verses that reflect the actual history of money, not just in the United States, but worldwide it's been. I first presented this to a bunch of professors and theologians at the Phoenix University of Theology. They have something they call a graduation forum every year before the graduation. And they have different speakers from around the world come and present to the graduating students, and a lot of alumni come and family and so on. And they have a really interesting mix of people. And when I presented this, it was at Phoenix, but I didn't get to meet Dwayne at that time. I met him quite a bit after that. Anyway, if you can see my screen, you see a $20 bill up there. It looks pretty much like our current $20 bill, but I've got it labeled the last U.S. money. And if you notice, it says series of 1928. So if it was printed in 1928, how could it be the last U.S. money? Well, the actual last one was 1932, but you notice the gold certificate there? That's what made it real money. At the top, if you can read the small letters, this is, there have been deposited in the Treasury of the United States of America. And then down at the bottom, $20 in gold coin payable to the bearer on demand. So that's what made it money. It was bearer money. You could turn the paper in and get real money for it. So that's where the expression good as gold came from. Starting in 1933, the United States basically confiscated all the gold certificates of all denominations and all the gold from American citizens. Some people say, well, that's crazy. That never happened. A friend of mine who's actually a Texas state legislator and an economist, his degree was in economics. And he said, I've never heard of this before, but I showed it to him. You can look it up. It's Executive Order 6102. And FDR, who a lot of people think of as some sort of hero, actually is the one that stole 549 metric tons of gold from Americans. So this was indeed the last U.S. money. What you have in your pocket now is not backed by gold, it's backed by debt. And so basically your money, whether it's a 10 or a 20 or a $100 bill, is an IOU. Here's a picture of the world's largest currency money ever issued. It was $100 trillion. I'll tell you a little bit more about that later on. But I used to give these away to everybody that came to my conferences. And I tell them, frame it, put it on the wall as a reminder of what the US dollar is going to look like if we don't start electing people who are conservative, at least fiscally conservative. There's different ways you can be conservative. You can be a defense conservative. You can be a social conservative. You can be a fiscal conservative. But at the very least, we need to send people to Washington who realize that you can't spend money that you don't have. That's what happened in Zimbabwe. And so they ended up kept issuing larger and larger and larger bills until they got to $100 trillion. It's interesting that there's no word for money in the Bible. the words that are translated in the King James and other translations are actually the Hebrew and Greek words for gold and silver. So they didn't have the concept of money as a store of value and a way to exchange your labor for different kinds of items. They just knew that silver would buy you smaller things and was used to pay laborers and so on, and that gold was used to make larger purchases like land and houses and so on. And so wherever you see the word money, it's actually either silver or gold that's translated that way. Usually if it's transactional, it's silver. If it's for wealth preservation or wealth building, it's the Hebrew Greek word for gold. So why do I say that silver and gold are the only biblical money? Well, look at Haggai 2:8. God says, the silver is mine and the gold is mine, says the Lord of hosts. Well, two big questions here. Why did he need to say that in the first place? Because the Bible says everything belongs to God. The cattle on 1,000 hills belong to God. The stars and the sun and the moon belong to God. So why did he have to say that anything in particular belonged to him when everything belongs to him? And then the second question is, why did he single out gold and silver? Why didn't he say quartz and cotton are mine, says the Lord of hosts? It's because of this. It's because the gold standard is a God standard. God was letting us know that he wanted us to make gold and silver the basis for our financial systems. So wherever we've used the God standard, as I call it, the gold standard, there's been no inflation, no deflation, no monetary crises. And that's what we want. So I believe that the reason Haggai 2:8 is there is God was alerting us to the fact that precious metals are supposed to be the foundation of economic systems that would be solid and stable and not subject to manipulation by the bankers and politicians. Because if they manipulate your money, why would they do that? Well, it's because they make money off of it. Historically, every nation that's followed God's plan, the God standard, has been blessed financially. And those that use fiat money have suffered tremendously, have actually even gone bankrupt as nations, like the Roman Empire did. So what is fiat money? Well, a fiat is a government decree. When the government says, this is so, that's a fiat. So if the government said that chipmunks are money, then the government has the power to enforce that and make people do business with chipmunks or cow patties or whatever. Okay, so they've taken worthless money, paper that has no value at all, and by fiat, they said, this is money. And every time that's happened throughout history, the nations have eventually crashed and burned. And by the way, of course, I'm sure you realize that we have fiat money. The money you carry in your pocket is not real. It's not money because it can't be exchanged for anything of value. Under the gold standard, the government, you saw it on the screen, the government was required to give you 1 ounce of gold for every $20 gold certificate. Today, for a $20 Federal Reserve note, which by the way is not federal, I mean the Federal Reserve is about as federal as FedEx. It's not a federal government institution. It's a series of 12 private banks. And that money is backed by debt, as I mentioned. So if you go to a bank, all the government is required to give you for your $20 bill is 2 tens or 5 singles or 20 singles or 4 or $5 bills. They're not required to give you anything of value. So basically your money is worthless. Its only value is this faith money, Faith. if you have faith that the money will buy you something, and you go to a store and the shopkeeper has faith that he'll be able to spend that $20 bill someplace else, then he'll accept it. As soon as nations start losing faith in their money, as has happened in dozens of nations throughout our world history, then the money quickly becomes worth nothing. We have what's called hyperinflation. So I like to describe the history of money as a series of firsts. Now, this may sound like a boring subject, but if you want to protect what God has given you, it's really exciting to understand what the history of money is, because then you can understand why your money is worth what it is today. So there's a bunch of firsts. The first time that the Bible mentions money is in Genesis 2:11-12, and gold in the land of Havilah in those verses gets the endorsement by God of being good. Gold was good. That was in 4000 BC in the second chapter of the Bible. The first money, and this wasn't really money, but it served as money. There was a culture that was centered in what we today called Eastern Europe that began to use gold to fashion decorative objects like the ring that you see here, the arrowhead. They were also used as money. They weren't really money because they weren't issued by a sovereign government, but people traded them, and gold is easy to carry and so on. So they functioned as money. The first medallion, this was the first gold medallion, and it was struck in Egypt around 2700 BC. Now, it looks like a coin, doesn't it? So you might say, well, what's the difference between a coin and a medallion? A coin has to have two things. It has to be issued by a sovereign government, and it has to be struck into the coin itself, and it has to have a denomination. Medallions either have neither, or they only have one of the other of those. And unless they have both, they're not considered to be actual coins or actual money. The first world reserve currency. You know, we tend to think of older civilizations as being not as, smart or cool or sophisticated as we are, because, we are very cool. Knowledge is doubling every few years and so on. But the fact is that in ancient civilizations, such as Egypt, there were some really great inventions. We visited Italy, and we went to Pompeii, which was buried by volcanic ash. But as they dug it out, and as they found the original city, it was very modern in many ways, much more modern than Europe was in general at that time, because they had systems of bringing water to homes, and they had sewage systems. Hundreds of years later, most European cities were just dumping their sewage in the street. And if you happened to be walking by on a sidewalk when they dumped it out of the upper floor window, you got covered in something you didn't want to get covered with. So, the ancient people were not as dumb as we think they are. In Egypt, they had an area of Egypt called Nubia, which had a lot of gold. And because of that, Egypt becomes a wealthy nation, probably the wealthiest nation of its time. It's kind of hard to measure that, but it was because gold became recognized as a standard of exchange for international trade. Now, they might not have used those words. They might not have called it WRC as I did, the first world reserve currency, but that's really what it was. And it standardized trade. A certain amount of gold was worth a certain amount of various different kinds of stuff. So it made Egypt very wealthy. The first shekel. we think of the shekel as a Jewish coin, but actually it's a Middle Eastern coin. It just lasted longer in Israel than it did in other nations. But the original shekel was not a gold coin, although it appears like that. It was made of something called electrum, which is a naturally occurring alloy. We've learned how to alloy coins, so we don't issue gold coins for circulation that are pure 100% gold. We deliberately add, say, copper to most coins, maybe 10%, maybe a little less, to strengthen the coin. Otherwise, gold is so soft it'll bend, it'll get scratched easily, it'll get worn down easily. Well, this was a naturally occurring alloy. It was approximately 2/3 gold and 1/3 silver. And over the years, as they dug electrum out of the earth, they learned how to refine it and separate it into gold and silver, because obviously gold has always been worth much more than silver. Now, we finally have the first gold coin. This is an actual coin. It was issued in Lydia, which is a kingdom of Asia Minor. You've probably seen that in the Bible. And this particular coin has a depiction of a lion on it. Now, I happen to own one of these in my own personal collection.
Wow.
And yeah, it's a very cool coin. I pass it around when I teach on this, and people are always very impressed. And we've recently gotten one
Who's
in.
the other fellow with the lion? What is he?
It looks like a ram to me.
Okay.
Because of the horn there.
Yeah.
But we actually recently got one of these in to Golden Art, my gold company. We import ancient medieval gold from Europe, and we have one of these for sale. So if anybody's interested in getting ancient, I don't know the exact price of it right yet because we just got it in, and I have to find out what we paid for it.
More than 1,000, more than 10,000.
It's more than a bread box and less than a B-2 bomber. You know,
Okay.
it's definitely in the thousands of dollars.
Okay.
But I think I paid about 10,000 for mine.
Well, I mean, the first gold coin ever made. That's kind of special.
It sure is. And every time I would pass mine around, people would try to buy it from me. I said, no, I'm not a coin collector. I'm a coin investor. And so if somebody offers me 3 or 4 times what I paid for a coin, I'll say,
by law,
nice
you
knowing
have
your
to sell
coin. Yeah, I'll kiss it goodbye and I'll sell it.
Go find another
but there are some people that are collectors that would never give up their coins.
What's on the reverse side of that? You got the animals on one side. What's the other side?
The other side looks to be a depiction of a cave. It's really hard to tell.
Okay.
But it
thought
looks
it was
like
just
there's
me.
people. No, it's not a picture of you for sure.
No, that's pretty funny.
Anyway, we import ancient and medieval coins, mostly medieval coins, because some of the ancient coins are really, really hard to get and very, very pricey. But you can get medieval coins that sometimes will go up 3 or 4 times in value for pretty reasonable prices. So if you're interested in learning more about it, go to CFRN Gold. You can remember CFRN really easily because that's where you are, and gold.com, and fill out the little form there, and we'll send you the Gold Education Starter Package, which tells you all about the differences between bullion gold and investment grade gold. It's got articles, it's got research reports, it's got some great videos, and you can learn a lot by watching those videos and reading those articles, and it's completely free. The gold's not free, but the information is.
Fantastic.
Okay, the first gold robbery. This took place in 344 BC, so 344 years before Christ. These days, worldwide, a lot of people don't like Jesus for some stupid reason. And so they've changed BC. You'll sometimes see BCE. You wonder what that means. It's before the Common Era. And the Common Era begins with the birth of Christ. So it's still based around Jesus, but they just don't want to say it. So they say BCE instead of BC.
The only person to ever split time, Christ.
That's right. He actually did. The whole world counts time up to his birth and since his birth.
Yep.
People before Christ, looking forward to the cross, they were saved, not born again like we think of it today, but they were redeemed because they were looking forward and trusting God that what he said in the Old Testament was going to take place, that there was going to be a cross and that Jesus was going to die for their sins. And of course now we look back to the cross as born again Christians. So you're right, Jesus is the first person to ever split time. Well, back to 344 BC, which is, I think that was the year you were born, right, Dwayne?
346.
Oh,
but thank
okay,
you.
Sorry. Alexander the Great, whom we've all heard of, crossed the Hellespont, it's a big river, with 40,000 men, quite a feat in those days. And he began this extraordinary military campaign, the most extraordinary in history. And in the process, he seized vast quantities of gold from the Persian Empire. The Persians were the richest people around back then. That's modern day Iran.
Only problem with seizing it is that now you got to carry it.
Yeah, and he seized a lot of it.
Well, he had 40,000 guys to tote it, so fair enough.
Yeah, and they were probably glad to tote it because they got part of it. Like in this slide here, the first time a national debt was ever paid off. In 58 BC, Julius Caesar went to Gaul and beat the heck out of them, and he brought back as part of his spoils enough gold to give 200 gold coins.
Is that where that saying came from? Oh, that really galls me. Is it? I bet it is.
I bet it is too. I never thought about that.
Oh.
But it wouldn't surprise me at all, where a lot of expressions come from. But the coin that you're looking at there is a Roman Arius. And it's a small coin. It's about the size of a dime. But it was worth a lot. It was worth months and months of wages. And not being a greedy guy, he gave 200 of these to each of his soldiers because, after all, they were the ones that won the battle. He just sat around in his tent and got entertained by his harem, and he wasn't on the front lines. So anyway, he gave 200 gold coins to every one of his soldiers, and he repaid all of Rome's debts. Yes, they had national debt back in those days. And eventually that's what killed Rome. Okay, the first inflation, Rome started to inflate its silver coins in 54 AD. Now think about this. The previous slide was 58 BC, so 58 years before Christ. Now we're at 54 AD, so that's 112 years.
Right.
Here they had all their debts paid off. They were in good shape, but politicians being what politicians are, the Roman senators wanted the people to like them, so they put on all kinds of big shows and circuses, and they brought Christians out and let lions eat them, and whatever. They wanted to keep the people happy, but they needed more money to do that. So starting in 54 AD, when the coins, the denarius, as it was called, were 94% silver, they started, as they came through the treasury, melting them down and adding lead to them. So by 518 AD, which is roughly 150 years, they were from 94% all the way down to 43%, less than half of the amount of silver as they had been. But it gets worse. 50 years later, in 268 AD, there was only 1% silver left in their coins. So they debased their money, and they didn't have a printing press. So when we use the word debasement, we talk about debasement of currency. What we're talking about is the government printing more and more money backed by nothing. They're debasing the value of the money. But debasement actually is a coin word, not a currency word. So they did it without a printing press. First really big mistake. The Romans let their money become so worthless that the Goths, not the ones you see in airports these days, with...
You mean it's not the teenager in black at Starbucks? Not that guy?
No,
okay.
with about 5 pounds of hardware stuck into various parts of the nostrils and
right.
Lips and tongue.
And that purple lipstick.
Not that kind of Goths. Yeah, not that kind. These were the sort of like the really rough and tough kind of Goths. They were able to depose the Roman Emperor Romulus Augustus, which started the fall of the Roman Empire. Now, there's different people that have different theories on what caused the Roman Empire to fall. Matter of fact, there's a whole book on it. It's about 3 inches thick, called The Rise and Fall of the Roman Empire. And some people put it down to the moral decay. There's a lot of homosexuality going on, a lot of prostitution, and so on. And a lot of corruption in the Roman government. And so some people put it down to just moral, some people put it down to government malfeasance. But economic historians attribute this to the debasement of Rome's coinage. The coins got so worthless that the soldiers couldn't feed the children. And so they deserted in huge numbers. They were called centurions. And the reason being that a company was a century, 100 men with a captain or leader. So the centurions, which were the backbone of the Roman Empire, they were the ones who were able to keep all the conquered countries in check. They started deserting and going home to farm so that their children wouldn't starve to death because the coins were worthless. So I believe, and most economic historians believe, that that was the real cause of the fall of Rome. All right, moving on along to 600 AD, the first bankers were goldsmiths. Have any idea why, Brother Dwayne?
Because they're the ones that hammered out the coins.
That's right. They had gold, and also they had a safe place to keep the gold. Okay? So when people got gold, say from selling an ox or a piece of land or whatever, they would take it down to the goldsmith, who would lock it up for them and charge them a fee. Now, if you took your money down to the bank today, you wouldn't expect them to charge you a fee. You'd expect them to pay you interest, right?
That's right.
And by the way, that's coming. It's already happening in some countries in Asia, where it's called reverse interest, where they're actually charging you money to, quote, keep your money safe. But anyway, that's what they did initially. But then they found something out very, very interesting. They could loan their clients gold out many times over. They didn't actually loan the gold. They loaned certificates for gold. Because what had happened by this time, the receipts that they made out, if somebody wanted to buy a piece of land, say I wanted to buy a piece of land from you, and you wanted 200 shekels of gold, and I had a certificate for 200 shekels of gold. Well, instead of me going down to the goldsmith, giving him the certificate and taking my gold out, I could just give you my certificate. Because otherwise, if I did the former and got the gold and gave it to you, what were you going to do? You're going to carry it down to the goldsmith and put it back in his safe and get a certificate. So why not save time? So that became sort of the first form of paper money. But at this point, the goldsmiths stopped charging people to put money in their banks, and they started paying them. Why? Because they could loan it out, and they would loan out 5-10 times the amount of gold that there was. If everybody came back and asked for their gold at the same time, they'd be in big trouble. But that never happened because it was just easier to carry around the paper. So that's what we have today. It's called fractional reserve banking. This is the first instance of it, where banks are allowed to have only 10% of the money they have on deposit available for withdrawal, and the rest of it they loan out. They loan out your money, they make interest on it, they give you a tiny fraction of the interest that they make. And if everybody came down at the same time, it's called a run on the bank would have to shut down because they're only required to have 10%, which is really stupid. Okay, the first fall in Europe, the first major country that falls down, Charlemagne defeats the Avars and plunders their vast quantities of gold. This made it possible for him to take over control over much of what we know today as Western Europe. So again, the motivation was gold. Most people think, and most history books teach, that wars are fought over principles and land and somebody getting assassinated and so on. But in reality, most of the major battles throughout world history have been over gold. Okay, so in 814 AD, we get the first actual gold standard. People have been using gold as the standard for their money for a long time, hundreds of years. But this was an official monetary system based on precious metals. And by that time, England and Great Britain were pretty sophisticated. So they based their money on the pound, what they call the pound sterling, which I always used to think that was kind of a funny name for a gold coin, because it was a small coin about the size of that one I showed you earlier, about the size of a dime, and it's about 1/5 of an ounce of gold. But it was called the pound sterling. Well, it turns out that after I did some research, that amount of gold was the equivalent of 16 ounces, which is a pound, right?
Right.
16 ounces of sterling silver, or very pure silver. So that's where we get the word pound sterling from. Okay, the first gold imperialism. King Ferdinand figured out that if he had gold, he could run the world. So he told his explorers, get gold, humanely if you can, but at all hazards, get gold. So, don't kill people.
Play nice
and
if you
maim
can,
them.
but just get gold.
Don't torture them to get them to tell you where the gold is.
Unless you have
But
to.
if you have to, it's okay. At all hazards, get gold. Of course, this backfired on him eventually. All right, the first Constitution. Now, was our Constitution of 1787 really the first Constitution? No. There were numbers of constitutions before this, but this was the first Constitution ever to define what money was. And there's been no Constitution since then that has defined what money was. And by the way, ours is the longest surviving Constitution in world history. From 1787 to today, that's a lot of years. I can't do the math in my head, but no Constitution has lasted anywhere near that long. And by the way, no paper money has lasted as long as ours has, because initially it was backed by gold and silver. The average lifespan of a paper money is 37 years. So in 1787, the U.S. Constitution had two very important phrases in it. Number one, it said that only Congress, not the Federal Reserve System, only Congress itself should have the power to make money. And they didn't say make money or print money or produce money. They said specifically to coin money. Now, can you coin a $20 bill? Of course not. So everyone understood. And you can search the Constitution. I've done this dual word search. If you go to one of my websites called Conservative Truth, we have the Constitution and the founding documents there. And you could do Control F and type in any word, that means find, and search the entire Constitution for any word that relates to money. Put in money, coin, paper, currency, bonds, gold, silver, whatever you want to. And you'll find that the only things that the Constitution says is that only Congress shall have the power to coin money. So the money we have today is unconstitutional. The only way they were able to get the Federal Reserve established was by doing an amendment to the Constitution, because the Founding Fathers did not want central banking. They were smart. So that's real U.S. money. On the right, you see a silver dollar. On the left, you see a $20 Liberty coin from 1932. That's the last year that they were allowed to circulate. All the 1933 coins had already been manufactured and ready for distribution by the time FDR took office. He ordered them all to be melted down, along with all the gold that he stole from the American people, 549 tons. And that's why they had to make Fort Knox. Fort Knox didn't exist before that. They dug a big hole in the ground. They made a major vault there. And then they built a whole military base around it with cannons and so on, and tanks and machine guns to protect it. All right, the first hyperinflation, 1789, right after we got our Constitution. Over a period of 8 years, the French go from a sound gold-backed economic system through two disastrous fiat currencies to major runaway inflation. So they had a currency called the assignat, which was a paper currency, and they told everybody, "Hey, it's by fiat. This is money, and it's really valuable, and it's great." And the people didn't trust it, and the merchants wouldn't accept it because it was backed by nothing, and they insisted on gold and silver. And so eventually the government had to go out in the streets of Paris and break the printing press plates of the assignats. And they said, "We got a much better idea. We have a great currency called the mandat." And by that time, by the way, they had produced 32 times the amount of assignats that were permitted by their parliament. Okay, they were only supposed to produce 1.8 million livres of assignats. They had produced 32 times that and created huge, monstrous hyperinflation. So they said, "Okay, we're going to do it right this time. We got the mandat." They broke the plates. They said, "No more will we print these. We're going to print these wonderful new mandats." Well, it only took 2 years for the mandat to lose 96% of its value. And again, the merchants were saying, "I'm not taking this garbage. If you got gold or silver, I'll sell you bread. But other than that, go away." So the government produced what's called legal tender laws, saying that we say this is money and you have to accept it as money. And if you don't, you go to prison. And prison wasn't like our prisons today that are air conditioned with color TVs and workout rooms and all this kind of thing. They were holes in the ground, a lot of times filled with water and rats running over you. And they would throw you a piece of moldy bread once a day. But that wasn't enough to stop the merchants from saying, "We want gold or silver." So then they said, "Okay, we will chop off your head." That's why you see the guillotine there. They executed people for the crime of asking for real money. But even that didn't deter most people. So finally they said, okay, we've got a great idea. We'll go on the gold standard. Well, you idiots, you were on a gold standard. Everything was working fine. You just got greedy and wanted to print a lot of money, just like FDR did when he took us off the gold standard. The only president ever to be elected 4 times, by the way. And the reason he was elected 4 times is because he was able to print worthless money and buy votes. Okay. So they went back to the gold standard, which eventually the United States will be forced to do as well. And then they had economic stability again. But 4 times in their history, the French have lost their money through hyperinflation. Germany's lost their money twice through hyperinflation. Okay, the first counterfeiting in the United States, 1913, that was when the Federal Reserve System was established, and it was established specifically to print counterfeit money, unconstitutional money. And even the U.S. Treasury, if you look on the USTreasury.gov and you look in the FAQs, frequently asked questions, it says that these notes are backed by nothing. Federal Reserve notes have no backing whatsoever. Okay, the first modern hyperinflation happened in 1919. Germany started printing money to pay off its war debts. When they started doing this in 1919, the exchange rate was 4 marks to $1 US. So each mark was worth around 25 cents. But within 4 years, the rate was 4.2 trillion marks to dollar. So they had 1 trillion times inflation. It's almost unbelievable, but it happened. The note that you see on the right, it says 5 Milliarden Mark. 5 is 5. Milliarden sounds like a million, but in German, Milliarden is billion. Okay, so this was a 5 billion mark note, the largest ever printed. But within 3 weeks, by the time they got them back from the printers, the money had already hyperinflated to the point where it was worth 1/20th as much. So they didn't have time to go back to the printer. They got a rubber stamp and they hand stamped it, 100 Milliarden. So what you're looking at there is a 5 billion mark note changed by the government to 100 billion mark note. And by that time, people were burning these notes in their fireplace to keep warm because it was cheaper than buying coal. Their money was basically worthless. First worldwide depression. During the 1920s, the U.S. government allowed 10-to-1 stock market margin, creating massive speculation. I've talked about this on your show before, Dwayne, how crazy it was to have 10-to-1 margin, because a normal 10% correction means that people have lost all their money. Okay, they only put up 10%. Market goes down 10%, they're bankrupt. And that's why hundreds and thousands of people were jumping out of skyscrapers to their death, because that's the only way they can support their family with their life insurance. So what would have been a normal market correction became a financial disaster, and that caused the market to drop even more. So it was down 30-40% at one point, and that drove us into the panic of 1929, which created thousands of bank failures. This in turn led to the Great Depression, but we call it the U.S. Great Depression. I saw an interesting picture. A guy had a picture of a brand new car on Wall Street, and there was a cardboard sign on it that said $100 will buy this, $100 cash only will buy this car. Lost all my money in the stock market. So what you're seeing here is a picture of people lined up around the block trying to get into the bank to get their money, and only the first 10% or so of the people got any money, and the rest of them, they just locked the doors and had to call the cops. So that was the U.S. Great Depression, but it is spread worldwide. That's why title said First Worldwide Depression, because what happened in the United States didn't stay in the United States. the first gold confiscation, I alluded to that earlier, happened 20 years after the establishment of the Federal Reserve System. Coincidence? Exactly 20 years later? Perhaps. Or was that the design? We'll never really know. But I believe that when they established the Federal Reserve System, they planned on confiscating the gold, but they wanted people to get used to the fake money, the monopoly money, so they allowed it to circulate side by side with the real money for 20 years. Now, whether they deliberately caused the Great Depression or whether they were just waiting for the next big financial disaster, because once we went off the gold standard, it was a definite that we were going to have a big bust in the markets. But anyway, in 1933, as one of his first acts as president, FDR issued Executive Order 6102. Look it up on the United. You can get the entire wording of it. And he confiscated 40% of the wealth of the U.S. And for the first time in history, a ruler made it illegal for citizens to own their own money. And it's never happened again in history. He falsely claimed that this ended the Great Depression, but no less than Ben Bernanke, who's considered the greatest living scholar of the Great Depression, said that this is totally false because the Depression had already started to turn around the summer before FDR was elected. But things were still pretty bad, so he claimed that taking all the gold away doesn't make a lot of sense, does it? Stealing everybody's gold is going to end the Great Depression. But he claimed it, and people tended to trust their government in those days, not so much today. So he made ordinary citizens felons for the crime of owning their own legal money issued by the federal government. A real dirtbag, if you ask me.
Yeah.
So I'll end with this. You choose. Which would you rather have, 80 cents or $1,500? Okay. The 80 cents represents the current value based on 1933 money of a $20 bill, because the money has lost 96% of its value to inflation. We didn't have inflation prior to 1933. There'd be a little bit of inflation during a war because that's when governments borrow money, but then they pay it back and then you have some deflation. But overall, for 157 years, we were flat for inflation. And during all this time, gold just keeps going up and up and up. And today, that gold coin that your granddaddy turned in to get the monopoly money is now worth $1,500. So which would you rather have?
Yeah. Well, I'll take the gold.
Any day, anytime, you got it. So if you'd like to learn more about this, please go to CFRNgold.com. We will not spam you. We will not harass you. We will send you invitations to our webinars where you can learn more about precious metals. And we also teach about finance in general, what the Bible says about money, how you can biblically get out of debt and stay out of debt, how to do a budget, how to teach your children about money, and also the best way to buy a car, insurance, how to invest in real estate, you name it. We have some of the top experts in the world that come on these our webinars and teach. They're international. I've spoken all over the world on this. So we have students from all over the world that attend them. And one of these days I'm going to talk Joanne into coming and teaching on one of our Monday night webinars.
Well, I'll do that. You let me know when. I'll be there.
Okay. But bottom line is that we will send you invitations to webinars. We will also send you the Gold Education Starter Package, which tells you all about the difference between gold bullion, which is what most people think about when they think about buying gold, and investor grade gold. Investor grade gold has historically had 7 to 8 times the return of gold bullion. So it's a lot more valuable, and it'll make you a lot more money, and it's a lot safer. So investor grade gold is both the safest and one of the most profitable investments you can make. There are investments that you can make that will get better returns, but you have to take a lot more risk. So at least part of the money, I know a lot of y'all are making millions of dollars trading Dwayne's system, but take part of that money and sock it away in something that is just going to grow quite a few percent every year and stay safe. So, any questions coming from anywhere there?
I'll look at the chat box and see if there's anything there. There were some comments about the crash. How many people jumped in 1929, Black Thursday, October 24th? So at the end of the year, 100 suicides and attempted suicides were reported in the New York Times. Could have been fake news, I don't know. Including cases around the country and overseas. 8 of these people had jumped from buildings, bridges, boats, or airplanes. Half of these plunges were attributed to the losses suffered in the crash. The number of suicide leaps on Wall Street during this period was just 2. Just saying.
On Wall Street.
Yeah.
Okay.
All right.
Is that a link there that he sent?
No, he just typed it all in. He's given it that kind of thing.
Yeah, I've seen reports of hundreds of people that jumped, and I've seen other people.
Washington Post is where he pulled it from. Oh, and Tim wants to know if you could go over the European gold coins that you're blowing out at a bargain price.
Okay. Mainly, they're the French 100 francs, and let's see if I've got a picture of that here. If I can get down to it real quick, because we didn't have enough time to go through this whole presentation today, so I'll pick it up next week. Come on, I know you're there. There we go. These are the 4 flagship coins of the world. So the top left is the 5 pounds. Now that's an old one, obviously, from 1825. Today, they're made exactly the same way, same alloy, same weight, which is 1.3 ounces. And you can get those for not a whole lot over the price of spot gold, but they're worth a lot more because they're actually rare coins. And then the one to the right is 100 francs. Now, by the way, the ones that we can get today are made from 1980 on. So you say, well, that's not old, so therefore they're not rare. Well, actually, they're a lot more rare than some of the much older coins. Some of the older coins were made thousands at a time. The U.S., most of our coins, we made millions at a time. But since Queen Elizabeth has been the queen, Parliament has set a limit on the number of these coins that can be produced in a year, and that is 7,500. And most years they produce less than 5,000, which is the definition of rarity, 5,000 or less. Most of the coins that we buy are 3,000 or less, and we've been able to get a lot of them that are less than 1,000, and a few that are like 188 made. So of course those are worth more than the ones with 3,000. But the most interesting thing is the very first Queen Elizabeth coin that was made back in 1933 when she was coronated. You can't buy one for less than $1 million. Okay, so we expect these to go up quite a bit. Now, on the other hand, another very interesting coin is the French 100 francs. The original ones were made back in the 1850s. Now, old doesn't necessarily mean rare, but it obviously contributes to it because the older a coin is, the more chance that that a lot of them will have been melted down or
Right.
damaged or whatever.
Sure.
Uh,
Converted
so
into
those
Bitcoin.
Yep. Those had Napoleon III on them. Well, of course, after the Revolution, they couldn't have monarchs on there anymore. So they picked a Republican symbol here. And people call these angels because of the wings. But the actual title of the character there is the Winged Genius. And if you're looking at it up close, you can see he's writing on a tablet, and it says Constitution. So the French, after they deposed and chopped the heads off of all the royals, they operated as a republic. Now, the interesting thing about this is only 983,000 of these coins were ever made. And that sounds like a lot, but when you compare it to the fact that every year, almost every U.S. coin, 1 million were made. So way more than all of the 100 francs ever made throughout history. Right. And these were made over a period of almost 60 years, from the 1850s to about 1910. So they are actually rare coins, and some of them are very rare. Some of them sell for quite a bit of money because certain years they may have only made a very, very small amount, like less than 100 or something. But in general, we can get 100 francs, again, for not too much over the spot price of gold. But the difference is this: if you just have bullion gold, which the spot price is what you see scrolling across the bottom of the TV, when I say gold is $1,502,
right.
that's talking about a price that you can't buy gold at. It's just like when they say that the prime interest rate is 2.5%, you can't get a loan at 2.5%. That's just the base. So the spot price of gold, even coins like the one on the bottom right there, US $20 coins, even though they're very common, they command a premium of about $100 over the gold price, because they're not rare, but they're scarce, because they're not making any more of them. Most bullion coins, you'll pay anywhere from $40 to $100 over the spot price of gold. But for not a lot more than that, a few $100 more, you can get coins that are really rare. So if I'm wrong, if we don't have a crash and things just keep stumbling along the way they are with 3 to 6% inflation a year, then your bullion coins will keep you even with inflation. But the near bullion coins, which is what these are, can not only keep you even with inflation, but because they have two kinds of value: the intrinsic value of the gold and the extrinsic value of the rarity and condition, you can make a nice profit. And on the other side, if gold goes down, which it occasionally does, usually the near bullion coins don't, because their rarity holds them up. So, personally, I do believe in bullion, but instead of buying bullion coins, I buy near bullion coins for about 10% of my precious metals net value, and about 90% goes into the rare or investment grade coins, because they will really make you some serious money.
All right, Tim, let me go back to the chat box, see if that answered your question, or if you have another question.
I charge $20 per question, by the way.
Okay. How's about you share with us what you're going to purchase with the money you get from the sale of these coins? What's that investment? He says, I'm just rattling your chain. But
okay.
When you roll out of an investment, that's a valid question. I have something of value, but I want to get out of it so that I can get into something else. Is it because I see more value in the other item, or do I just want to realize my profits here and then start the process all over again?
Well, one simple comparison would be 100 years ago, if you had $4,000 and you put it in the stock market, Today it's worth about $83,500. If you put it into a house, it's worth about $250,000. If you kept it in gold, because remember, back 100 years ago, the money was gold, it's also worth around $250,000. But if you bought U.S. rare coins with it, it's worth around $2 million. So if you had it in hard assets like real estate or bullion, you made about 3 times as much as you did in the stock market. But you made 8 times as much as bullion if you had it in investment grade coins. Now, as far as, if I heard the question right, if he wasn't just looking for a direct one-on-one comparison like that, the principle is that when these coins go up in value, number one, you sell them when you need the money. You don't sell them just because they're up. If you buy a stock at $100 and it goes up to $250, you don't just sell it because it's up $250, right? You wait until it weakens and you start to see volume starting to dry up, then maybe you sell it, or you wait until you need the money, by which time it could be up 300 or 400%. So it's the same with coins. You sell them when you need the money. But there is another dynamic here, and that is sometimes, the gold in our collection is going to be worth in excess of $1 billion one day. So we're trying to build it up, and different people have different parts of the gold in our collection. They own it, they hold their own coins. Mm-hmm. So let's say that we have let's use the example of the 1825 here, an 1825 5 guineas in MS63. MS means mint state or uncirculated. And we get an opportunity to buy one in MS65. Well, back then, you couldn't make a MS70 coin that didn't have the technology. The grading scale goes all the way up to 70. Mm-hmm. But back then, an MS65 would be the equivalent of an MS70. It's the best you could get. Well, we're going to buy that coin, and then we will offer it to the person that has the MS63. And if they want it, they just pay the difference, and we let them upgrade their coin, and then we sell their coin back out into the market to a dealer, because we always want to have the best of the best. All right. So that is something that people do, the upgrade coins. And then also, we have one gentleman, he fell in love with Cromwell coins, and he has the best collection of Cromwell coins in the world. So whenever Cromwell coin comes up, he wants it. So he upgrades his collection that way. And if he has some other gold coins that are not from the Cromwell era, he'll sell them and upgrade. For him, it's an upgrade. The coin could be the same value, but it's an upgrade to him because he wants to maintain his status as having the premier collection of Cromwell coins, because Cromwell was the only non-royal to ever rule England.
Okay.
This whole thing is a lot of fun, by the way. I love art, I love history, I love economics. So when I study these coins, I'm learning about all of them. Some of the great artworks of the world are in coins. And they're like the Bible says, gold, neither moth nor rust doth corrupt. If you have antique paintings, rare paintings, eventually they're going to rot. They're on canvas, but gold never will. So it's beautiful artwork, history. There's a big chunks of history where there was gaps. We didn't know what was going on for sometimes 50 or 100 years or more. But as coins were found and excavated, then we find out from such and such a year to so-and-so year, this guy was king. And so we're able to plug holes in history. That's how come we know that who did Cleopatra? That Cleopatra was not anything like Elizabeth Taylor. Cleopatra was actually pug ugly. She looked like a lot of guys I know that have been too many boxing matches. But that's what the coin shows. They accurately depicted her. In more modern times, the kings and queens made the engravers make them look better, or they would chop their heads off. So they were motivated to do a little medieval photoshopping.
Medieval. I get it.
Yeah.
That's a good one.
Okay, CFRNgold.com. Go there right now, fill it out, and we'll send you some wonderful information.
Hey, let me ask a question. Do you have a cryptocurrency exchange of choice, one that you particularly like over another one?
Well,
I think Binance stopped accepting U.S. customers, right?
Well, I'm still using Binance, but maybe they stopped accepting new ones.
Oh, okay.
Yeah.
Maybe I'm thinking of some other place. I think you're going to be able to keep your account, but you could no longer buy and sell on their platform. Maybe there's so many of the exchanges. Maybe I'm just confusing it with a different one. So is that the one you
we
like the
use
best?
Gemini to convert our money into cryptocurrency.
Okay.
Because it's big and it's solid, and it's approved by the state of New York, which has tougher financial laws than the United States does. But you can only convert to a limited number of coins. I think about 5. So then once we convert it, and it's pretty cheap to do that, then we move it from Gemini. We only buy Bitcoin, and we move it over into Binance and trade it there.
Okay, so you're still actively trading on Binance. Okay, so then I definitely remember that improperly. Okay.
Maybe it's just because of my good looks. I don't really know.
The problem with Coinbase, it's pretty widely respected and whatnot, but you could never get anybody on the phone there.
Yeah, and they're based in California. Binance is also based in New York. That was another thing in its favor. Binance and Coinbase are pretty much equal as far as most everything else, capitalization and so on. But the fact that Binance is in New York means that it passes the New York state laws.
All right. Okay, just thought I'd ask.
Okay.
Thank you, Dr. Tom. Appreciate it very much. We'll see you again next Thursday.
God bless you, and God bless all your listeners today. Have a great week.
Take care.
Bye-bye.
All righty. We're looking at crude oil. Crude oil, we had a leg and a retracement. A leg and a retracement. The question now is, will we have another leg to the upside? S&P. High level battle at the top. Leg and a retracement to the BBC. A leg and a retracement to the BBC. And the beginnings of a green candle here. Where will that take us? Now, this area right here is important simply because it's a round number. Our highest zone for the week, 3120/21. Oh, and there was that gold alert that we did on the show Tuesday, I believe it was, 1475 to 1470. Now we've already traded through this week's lowest weekly trading zone. Last week's lowest weekly zone was 65.66. So we could say that's still hanging in there, 65.66. Now, Whether you trade gold or crude oil, or the S&P or the Dow, or the NQ, or pork bellies. I said pork bellies. If you're looking for a streamlined, simple way to trade, this green line, got to give everything a name, call it the bull-bear cross. When price crosses below it, we're bearish. What does that mean? It means we anticipate lower prices, like that. Price is going to always revert. Once it gets there, then what? Well, once it crosses over, hence the name bull-bear cross, once it crosses over and we're on the north side, we anticipate higher prices. But what if it doesn't go higher? Okay, well, we're anticipating higher prices. We get nominally higher prices, about 8 points worth, from 88 to 96. That's about $800 per contract. Now, right here, price says, no, actually, thank you very much, I'm going back on the other side. Okay, we can accommodate that. So we get a lag, we get a retracement. Remember, price is always going to revert. So there it is reverting. At this point right here, you make a decision. Okay? When this red candle closes, you're either going to get short here or not. Say it again, you're either going to get short there or not. The chart's telling you exactly what to do. Now this is a 30-minute chart. We could go daily. Does it tell us the same thing? A bearish cross. In April of 2018, we did not get a true bullish cross until October of 2018. Price fell from 1384 all the way down to $18,000 per contract move. Then we get a bullish cross. We get a lag and a retracement, a lag and a retracement, a lag and a retracement, and a lag and a retracement, and then right here everything changes. Now we're building legs to the downside. Lag and a retracement, a lag and a retracement, a lag and a retracement, a lag. Get back on top. Bearish, bullish, bearish, bullish. It really can't be that simple. Lag and a retracement, a lag and a retracement, a lag and a retracement, a lag. And right here, see that? Narrative changes. From here to here, no change in narrative. From 1331 to 1519, about $20,000 per contract. That's what that amounts to. Now, this isn't just some anomaly that happens with gold. Everything that we do, everything that we teach, everything that you have access to when you become a partner or passport holder, everything a trader needs for every market and every time frame is right here. So we're going from gold, where that looked real good. Let's look at crude. Two different markets. Bearish cross, October of last year. We did not get a bullish cross until January of this year. That cross happened at 68, we call it $69. at $51. Do the math. $10 a tick. Then we get a bullish cross. Leg and retracement, leg, retracement, leg and retracement, leg and retracement. So right here, narrative changes. Right there. We got a leg, we got a retracement, and instead of bouncing, see, the BBC holds more often than it doesn't. Pull back, it held, it held, it held, it held, didn't hold. Oh, okay. So maybe we're going to look at lower prices. Well, we're below the BBC, so that does indicate the potential for lower prices. There we go. Narrative changes here. Leg, retracement, leg. I mean, just this little hop right here took us from 56.60 to 59.60. That one leg right there, that's a $3,000 per contract move. Back to the BBC. It holds because it holds more often. Then it doesn't. So now we're going to go from 56.70 to 60.50. Let's call it 60.70. Let's call this. Let's call it, make for easy math. Let's call it 57. Yeah, we'll call that 57 to 60. $3,000 per contract move. And on this pullback, it didn't hold. Oh, so maybe we're going for lower prices. Leg and a retracement. A leg and a retracement. We overshot it here, but we don't have a cross. Boom, boom, boom. That's daily. That's gold. All markets, all time frames. How about the Mexican peso? Okay. Bearish cross, lower prices. Bullish cross, higher prices. Here, just as we're getting a bearish cross, price jumps back above the BBC. So from here, you think of absolutely nothing but going long. If you're just looking at a daily chart, if you just wanted to trade a daily chart, okay, well, we're above, so we're gonna go long. Going long, in this case, has its rewards. Now, how about bonds? Go bonds. Last night, the Concierge Trade Alert for bonds was, stand by and I'll retrieve it. Last night, bonds. Consider being short, 158.15. There we go, 158.15. Now from 158.15 to 157.15, that's $1,000 per contract traded. 156.15, $2,000 per contract traded. About $2,500 per contract traded, just going short last night at the alert. Now this big move over here, bearish cross came on November 1st. That would have been last Friday. So Sunday night, the 3rd, the alert said, serving short 160.19. And that's All right, 160.19 to 159, 160.18 to 159 to 158 to 157 to 156. $4,000 per contract move. We had a bearish cross. Remember, we were bullish. We were climbing last week. And on Friday, we got this bearish cross. So coming into Sunday night, we pull right up to the BBC where we expect it to be good resistance until it isn't. Trigger, leg and a retracement, the leg and a retracement, leg and well, you get the idea. Then we get above the BBC. It's good for a leg and a retracement and a leg. Then we get back below. Well, what about a 5-minute chart? Seriously? Yeah, seriously. All right. Enough fun and games. Let's go to the good word for the day. I'll bid you adieu. Got a partners workshop tonight. Partners, passport holders. If you've been on the trial and you would like to be in that closed door meeting tonight, you're invited. Just get a hold of Valerie, 949-42-EMINI. 949-42-EMINI. Give her a call. Or send an email to support@cfrn.net. If you've been on the trial, check your inbox. You should have received an email already that gives you prices. It's like a menu, a spec sheet. What you get, what it costs you, and a passport is for life. So check it out. Get a hold of Valerie. She'd be happy to help you. All right. Yesterday we talked about, or the day before, we talked about teaching moments. Today, talk about forgiveness. Kind of a big deal in the Bible. Sort of a central theme of Christianity, or at least it's supposed to be. Philippians 3:13. Brethren, I count not myself to have apprehended, but this one thing I do, forgetting those things which are behind, and reaching forth unto those things which are ahead. The Bible says that the greater the offense, the greater the need to forgive your offender in order to go on with your life. Remember when you were growing up, how your parents would always tell you to close the door? That's because in winter you were letting in the cold, and in summer you were letting in the insects. Forgiveness shuts the door on your past. Paul, who martyred Christians before becoming one, writes in Matthew 18:21-22. I'll quote it out of Matthew 18:21-22. Paul wrote, "The one thing I do, forgetting those things which are behind, and reaching unto those things which are before." Only when you release your grip on the past can you secure your grip on the future. Forgiving is a decision, one you sometimes have to make daily or even hourly. But the bottom line is you need to forgive every time the issue that's hurting you rears its head. Unforgiveness is a bitter root. It will destroy lives, relationships, families. Complete healing can take months or years. When someone hurts you deeply, you must purpose in your heart to keep forgiving them until you're free of their influence. No matter what they took from you through abuse, abandonment, betrayal, manipulation, or deceit, the fact is, bitterness will take even more. You become their prisoner because you refuse to forgive them. It's kind of like making a rod for your own back, or cutting your own switch. Did your mother ever make you do that? Hey, go out there in the yard and cut me a switch. Oh my goodness. Don't come back with no skinny switch. No matter what they took from you, abuse, abandonment, betrayal, manipulation, deceit, bitterness will take even more. They still win when you live in unforgiveness. They don't suffer because you don't forgive them. So until the issue is resolved, you may have to get down on your knees every day and pray, Lord, by an act of my will, I'm making a conscious decision here, God. I don't feel it. I'm not all emotional about it. This certainly isn't giving me any goosebumps. But I forgive whoever for whatever. And God, I ask you to bless them. I'm turning them over to you. I'm turning the situation over to you. And I'm going to get on with life. I'm going to get on with doing whatever it is you put me here to do. That divine destiny that you carved out just for me. Tasks that no one on this earth can complete but me. That's a divine appointment. So, whatever it is that's holding you back, forgiveness for whatever, when you forgive, you win. And it becomes a matter between them and God. Yes, you're releasing them, but more importantly, you're releasing yourself. That's our good word for the day. It's the only path to true freedom. Forgive. All right, guys. See you tonight in the workshop. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.